Hi everyone, welcome to the show. If you have been worried about rising prices, unpredictable stock market, or just wondering how to protect and grow your money in 2025, today's episode is for you. We are diving into alternative investment, what they are, why people are choosing them, and how they can help you fight inflation and volatility. And I'm super excited because today we are diving into private markets and exploring how alternatives are becoming accessible for everyday investors. Let's get started.
Yes, this is such an important topic because inflation and volatility are things almost everyone is dealing with right now.
Let's start with the basics. So, people keep hearing inflation is eating away your money. But what does that really mean?
Great question. Inflation is basically when prices of things go up and the value of money goes down. For example, 2 years ago, $100 might have been covered a full week's worth of groceries. Today, that same $100 only gets you groceries for about 4 to 5 days. So even if your salary hasn't changed, you are actually poorer in real terms because your money buys less than it used to.
On the top of that, the stock market has been unpredictable, soaring one day and dipping sharply the next. This makes people ask how can we safeguard our saving while still building wealth?
Exactly. And that's where alternatives comes into picture.
Traditionally, people invest in stocks, mutual funds, and fixed deposits. But what is the problem with only relying on these?
Well, stocks can be super volatile. You might see a 100% swing in a single week, and fixed deposits, while safe, often gives returns lower than inflation. So if inflation is 7% and your FD gives you 5%, you are technically losing money. That's why investors in 2025 are opening up to alternative investments.
For someone new to this, can you explain what exactly are alternative investments?
Sure, when we say alternatives, we are basically talking about investments outside of your usual stocks and bonds. So, for example, real estate. Instead of buying an entire flat or property, you can now invest through REITs, REITs, which means you are buying just a small share of property. Then there's gold, other precious metals. They have always been considered a safe way to hedge against inflation. Another big one is private equity or startups, basically putting money into young companies early on. And then the most exciting part is tokenized assets. This is where platforms like liquidity.io comes in. They let you own fractional shares of real estate or private companies using blockchain. It's like taking something that was once available only to the super rich and opening it up for everyday investors.
So it is like opening the door to markets that were once reserved for the super rich.
Exactly. Earlier, only HNIs or institutionals had access. Now, with platforms like liquidity.io, even retail investors can participate with much lower ticket sizes.
What is pushing people to explore options beyond stocks and FDs these days?
There are few big reasons people are looking at alternatives right now. First, diversification. It's that simple idea of not putting all your eggs in one basket. Second, they can actually protect you against inflation. Things like gold or real estate usually go up while price rises, so your money doesn't lose as much value. Third, alternatives give you access to opportunities that were earlier only for big institutions. Third, alternatives give you access to opportunities that were earlier only for big institutions or the super rich. With things like fractional real estate or tokenized assets, everyday investors can now get into. And lastly, the potential for higher returns. Sure, they come with risk, but history shows some alternatives have outperformed the stock market over time.
And I guess with platforms like liquidity.io, people don't have to be expert. They get access in a simpler, safer way.
Exactly. Liquidity.io is changing the game by bringing transparency, fractional access, and lowering barriers for everyday investors.
But I think it is important to point out alternatives are not completely safe either.
Right. There are definitely some risks people should keep in mind. For example, liquidity. With some alternatives, you can't just sell and get your money back the next day like you can with stocks. Then some options used to have really high minimum investments, which made them tough for regular people to access. But tokenization is fixing a lot of that by letting you invest smaller amounts. And lastly, there's a knowledge gap. Areas like crypto or startups can be tricky if you don't fully understand them. So you need to do your homework before jumping in.
If I am a listener thinking, okay, this sounds interesting, but how do I even start? What's your advice on this?
My advice would be just start small. You don't need to jump in with huge amounts right away. For example, you could look at REITs, which are listed on the stock exchange. So it's as easy as buying a stock. Or try sovereign gold bonds if you want a safer option linked to gold. If you're curious about newer things, you can even explore fractional ownership through trusted platforms like liquidity.io, where you can invest a smaller amount and still get exposure to big assets. The key balance is may keep 70 to 80% of your money in traditional safe investments and then gradually put 10 to 20% into alternatives. And remember, alternatives are usually a long term game. You've got to give them 3 to 7 years to really see the value.
Let's make this practical. Suppose a 25-year-old professional has 10 lakh in savings. Normally, she puts everything in mutual funds. What could she do differently?
Ria could do something like this: 60% in mutual funds and stocks, 20% in fixed deposits, 10% in REITs, 5% in gold bonds, 5% in tokenized real estate or startups via liquidity.io. Now, if stock market crashes, her gold and real estate still hold value, protecting her against inflation and volatility.
So she is building a safety net while also opening the door to higher growth.
Exactly, that's smart diversification.
So here is the big takeaway. Inflation and volatility are realities of 2025, but alternative investments give everyday investors new tools to preserve and grow wealth. And with platform like liquidity.io making them accessible, it is no longer just for the super rich, it is for everyone who wants to invest smarter.
Absolutely, the key is balance. Don't bet everything on one asset class. Diversify, stay patient, and let your money work as hard as you do.
Perfectly said. And thank you all for listening. If you find this helpful, share it with a friend who is curious about investment and send us your questions. We will cover them in future episodes. Until next time, stay diverse, invest wisely, and remember your money should work just as hard as you do.